YouTube live. And give me half a second while I start the program here. Excuse me, good to have you all here. I'm also waiting for everybody to join in. There's a lot of people still coming online here, so I want to give them a few seconds here to get online here. So, all right, looks like this should work. Hope it works. Anyway, we're waiting for something. I'm not sure what they're waiting for, but we are going to move forward with this. So, all right, should be all good. And I'm not sure if it's working or not, but anyway, I think they have to do something over at Eagle to make this happen. But anyway, all right. So anyway, let's get started. I see a lot of people still coming online here. Come on in, gang. Lots of room in the front here. We're gonna get started right now, all right? Because I'm not gonna keep you all waiting here, all right? Not gonna keep you all waiting. So, excuse me. Let's move on. And good morning, good morning, good morning, good evening again. Welcome to DayTradeSPY.com's Week Ahead, Week-In Review, Introduction to Trading, however you want to call it. My name is Hugh, and we're going solo here this evening. I don't believe Aaron is on. Let me just take a look here. Maybe he is. Hi, Aaron, you there? Hello, Aaron.
Yes, I'm here. Can you hear me?
Yes, you are there. Okay, good to have you here. Good to see you. You're all here. So, all right. How's your weekend? Pretty good.
Yeah, so far so good. Yeah, it's a little bit rainy out here in Washington D.C., but um, not too bad. It's mostly cloudy. You know, those where you see the storm clouds and then you think it's going to rain, you think it's going to rain, never rains.
Yeah. Like,
So
I can tell you what happened. So it was Friday afternoon. We thought we'd go over to Boston for for a little bit here for the weekend, and oh, I should have known the trip was going to be just a little bit off, but our flight's delayed, and finally got out of the. We're going to do a little sightseeing on Friday. By the way, I'm just killing a little time because people are still coming online here, so it's one of those casual evenings where we sit back and just kind of chat. But so we had to do a little sightseeing on Friday evening, and by the time we got there, it was pretty late. Took Uber to our hotel. My wife had it all planned to go to the Marriott Hotel. We pull up to the Westin. I said, "Well, I think we're in the wrong hotel." She says, "Oh, I think yeah, I told Uber to go to the wrong hotel." So she she talks the guy into going to the Marriott, and for another $10, right? Well, it turns out the Marriott's across the street. We could have walked to it in about 30 seconds, but anyway, of course, it went downhill from there. And it rained. It rained all the whole time we were there. It rained the whole time. And so then we on Saturday thought, well, we're gonna take an Uber to to the Commons, right? That's where all the action is, right? Let's go check the Commons. Of course, it's raining and raining, and we pull up there, and oh, there's what's going on in the Commons in the big park there. There's something going on, and some big Freedom Fest or something, and I don't know, some band playing, walking. Oh, there's all these tents over here. Let's go in there. Let's check what's going on with all these tents. Well, it turns out to be some marijuana fest or something. And we said, "Oh my God, get me out of here!" I don't want to. They're smelling this stuff, and people selling all this stuff and paraphernalia and drugs. And oh my gosh, let's get it. So we took an Uber right to the hotel. And anyway, yesterday, we came back, and so. Flew back yesterday, so it's kind of a dud sort of a weekend, but because of the rain, I think most more than anything else. And anyway, we're gonna go back when the weather's nice, and we're gonna take in all the sights. I love Boston; it's a great town. So anyway, that is what it is, and that is so pretty cool. Okay, all right, let's get moving here. My name is Hugh. I got to change something here. Sorry, Aaron. You know what? I don't know what I was thinking. I wasn't really sure if you're going to be on here, but I am going to put you on here co-conspirator here. Sorry, co-presenter, I should say.
co-conspirator. That's awesome.
Co-conspirator, co-conspirator, co-presenter. Aaron. Aaron.
Well, I thought I thought if you were I thought if you're in Boston a couple more days, you could at least put on a few option strangles. You know.
Oh, there you go. Well, no, I don't want to miss tonight, and I had to get back to the PowerPoint and all that. So we didn't. I didn't even take my computer with me. Didn't no laptop, nothing. Just
Huh.
so yeah, it was just gonna be one of those. But all right, let's get started. Today is Sunday, September the 22nd. You know what today is? It's the first day of fall. It's the first day of fall, and already there's some real beautiful trees out there. So We're in the we are in the in the mood for the fall. All right, so I'm going to leave this with you so you can read this, and I will be quiet for few seconds here while you go through this. All right, you alone are responsible for all your own trading, and past performance does not guarantee future results. I think you know all of that. All right, let's move on here. We have to put these disclaimers on. This keeps the lawyers busy, you know, and of course they have to eat too, apparently. So they tell me. All right, there's a questions box, folks. For your questions and comments, you'll find a little icon on your Zoom dashboard. Click on that. Aaron and I are the only ones that see that, so go ahead and say whatever you want. Be happy to take all your questions, comments, um, and hopefully we can answer. Now we're not going to get into specific, not your specific trades. That's not where this is. I did have a question earlier. Are we still doing any private training? The answer is no, not at this time. Um, and so we figure we answer questions a lot. We answer them on Sunday night for free. We answer them on a Tuesday, sorry, our Wednesday night inner circle webinars. We answer them in our trading room. So you got to be part of one of those services, right? Or Sunday night. But I had a comment here last week. I don't know if you're on there, but some guy wanted to know, well, we're going to teach you how to trade here. No. So if you think that you're gonna, after tonight's session, you're gonna become an expert trader, you might as well, log off now. That's not gonna happen. You know, as a matter of fact, you're not going to be able to ever anywhere buy a single book, ebook, DVD, CD, anything, or even go to a live session and become an expert trader. Becoming an expert trader takes a lot of time, effort, energy, and all that stuff. Okay, it takes a lot of commitment. And it's kind of like learning to fly. You need to get those hours in if you want to be proficient at flying or anything you want to do. What is that thing they say, Aaron? If you want to be good at something, you have to have, what is it, 10,000 hours at it or something? You might know something about that. So,
Yeah, I think they're just trying to say you need to do it for a lot of time. I think it just depends on each individual.
yeah,
Some people it takes a little bit longer. Some people it takes a little bit less. But I believe that's a Thomas Edison. Might have been a Thomas Edison thing, but I'm not sure exactly.
yeah, there is something. So, I'm going to ask you a question. Is this your first time here, folks? Put it up in the questions box if it is. Yes, if it is, no. If you've been here before, let us know. Just curious to see. And excuse me, we'd like to if there's a lot of people here who don't know anything about options, tell us if you're a first-time options trader, you don't know anything at all about options, let us know that. And if there are a lot of people, in that sort of category, then we might give you a little bit of an options primer at the end of the session, all right? We're not going to do it at the beginning because we don't want to bore all those people who are actually here for the weekend review and the forthcoming weeks. So, all right, your host, my name is Hugh. And I don't want to get too into this because I know a lot of you have been here before and you kind of know my background, but kind of learned trading from the trenches, deep in the mud. Uh, this is where I learned most of the stuff that I teach. Of course, there's a lot of the theoretical stuff I had to learn, from legitimate courses and different things, but all the really good stuff I learned from the School of Hard Knocks, and we teach what we trade what we teach. I look for mostly short-term breakout trades. Okay, a lot of small multiple trades in a day, and that's what I do to make money, and that's what I enjoy doing. I enjoy trading, so it's a perfect fit for me. Not saying that our system is the one and only trade system for you. I mean, there's nothing else. Obviously, there are many strategies that you can invoke in trading stocks and options and futures and whatnot, but this is what works really well for me. Hope it works out well for you too. So, folks, my co-conspirator, co-host, co-presenter is Aaron Stevens, and I'm going to hand it off to you, Aaron. Let us know all about yourself.
Yes, I started learning about trading in the stock market when I was in middle school. So I went to the middle school library and started reading the Wall Street Journal, actually. Give me 1 second.
Okay.
I I opened up my first trading account when I was 17, and I learned to trade on penny stocks. actually with I believe it was E-Trade. Um, I ended up taking a break after the stock market crash of 2001. Came back and I started learning to trade in the forex market and the commodities market, and I really liked it. And I went to naked charts. So I took all the indicators off and I started looking for the patterns and the basically the nuts and bolts of the market. So I started learning Fibonacci and Andrews pitchfork, support and resistance, and studied for and passed the series 3. Read several books on trading, and so if any of you are not familiar with my work or not familiar with DayTradeSPY, um, I'm in my 40s now. I started learning about the stock market when I was 17. It's a lot of hours, a lot of time spent on charts, spent on looking at patterns in the stock market. And most recently, 2007 is when I really started putting a lot of time and effort into this. So that's it's quite a bit of time, and I think Hugh would agree. I think we have over 40 years of market participation experience. I don't know if you still show that slide or not, but we have a lot of experience and a lot of understanding of the markets. So most recently, I was an analyst at $150 million commodity pool fund, a local fund based in Annandale, Virginia, but I worked for several other different firms. I'm also continue to be a licensed futures broker as well as a commodity trading advisor. So thank you very much, Hugh.
All right. So just so you know, Aaron is in the Washington, D.C. area. I'm in the Western New York area, so we're far apart, but we are where you are. Okay, wherever you are, we are. So all over the world, we have people from all over the world tuning in. Got some pretty cool comments already up here. I can't say. Here's one from Scott P. I just want to say this here. Can't say enough good things about the trading room. If you are not in, you are missing out big time. My second full week and up 11K, $11,000. Try it out, folks. You will be hooked. That's what Scott says. Thank you very much for that, Scott. And yeah, that's pretty cool. Everybody's saying no. Alexi is saying at least 10,000 hours. And new to the program, fairly new trader. Tonto, I believe is the first name there. All right. Okay. So we're going to take a look at last week, a little preview of next week. We're going to talk about the 2 to 5K trading room challenge. Going to give you an update on that. I'm going to give you an out in the cornfield chat. You can talk about your challenges since it's the first day of fall. That's a nice place to be, I guess. Why trade spy? How we can help, and we're going to answer your questions. Okay. You ever go to those cornfield mazes, Aaron? You know, where you kind of get lost? I don't know. It's been years since I did one of those, but
I don't think I've ever done one of those, but I grew up in the Midwest, so there's a lot of cornfields. There's a lot of kids that actually used to get lost in the cornfields. But uh, funny thing is they're using drone technology now to find kids that get lost in the cornfields.
oh, really?
And yeah, there's a story about a couple weeks ago. This little, I think it was 4 or 5 year old kid chasing a cat, into the cornfield,
Yeah.
and so these police departments now they use drones because it could be miles and miles and miles of corn, and so that he ended up being found safely, and they escorted him out, and yeah, he came out with the cowardly lion, the scarecrow, and the Tin Man. They kind of was wondering what happened, but
Hmm.
yeah, but it is a true story. Yeah.
Yeah, that's pretty cool. Yeah, I can imagine just getting lost in something you never found, right? Speaking of, I don't know what triggered this, but I saw a video the other day. It was the funniest thing. I thought I was going to die laughing. This lady, she says, "Here's our family recipe for cooking cats," and she puts this beautiful little white cat in the oven, and says then she pulls it out a little bit later and says, "Oh, it's not done yet." So what she pulled out was an orange cat, and anyway, eventually she pulled out a black cat, and it was a takeoff on this eating cats and dogs thing, and it was actually really funny, but. Anyway, I don't want to get all that. That is, oh my gosh. Well, the politics is unbelievable. I don't even know if it's entertaining anymore. But a couple announcements, folks. Money Show. Aaron and I are going to be at the Money Show at the Omni Orlando Resort at Champions Gate, October the 17th to the 19th, in about a month's time. we hope to see you there. Come down, say hi to us, meet us, and let's chat it up, and maybe we'll even exchange a few ideas and make your trading a little bit easier, hopefully. Second announcement, Spy on the Market. If you don't have this already, it's a free newsletter. It goes out every Thursday. It's just a brief 2-3 minute read. And it's light, relevant, entertaining. One thing I do want to change here, I do want to put another period in here. Where did it go? This there. There we go. All right. There, all right. And just subscribe. All right. All you have to do is go to the website, DayTradeSPY.com. Okay. And when the pop-up comes up, just leave your email address, and that'll put you on the mailing list, and you're going to get Spy on the Market. It's not a boring read. It's not long. It doesn't get into boring details. It's actually quite entertaining. Most people like it anyway. This week's topic: how presidential elections affect the stock market. How presidential elections affect the stock market. So I think you're kind of going to find it interesting. So that's coming up this Thursday. All right, let's take a look at the market week in review. Here's what happened. All right, let's take a look here. Well, on Monday, last week, we had the Empire State Manufacturing Index, also called the New York State Manufacturing Index, came in significantly higher than expected. I think the number came in at 11. Was it what? I should have it here. Hang on. So let me just pull it up real quick. Not that it really matters that much, but I want to. It was actually quite a bit. It came in at, it came in at, yes, 11.5. The forecast number was minus 4.1, which tells us the economy is chugging along very nicely. Thank you very much. And there's a little concern about, is this inflationary? What's going to happen now? So the big news was the new interest rate announcement. A new interest rates coming up on Wednesday. That was sort of the big thing. Well, not sort of. It was the big thing, and everybody's sort of posturing for that and positioning, well, what's going to be a 0.25%, 0.5%? What's it going to be? How's that going to affect the market? What's going to happen? But anyway, SPY did drop a little bit there. It dropped, I think, a point or two, found the key support level and attracted buyers, ramped it back up, closed the day a little bit higher than it opened. On Tuesday, we had mixed retail sales numbers. On Tuesday, we had retail sales numbers. The retail sales month over month came at a 0.1%. They're expecting a minus 0.2. The core retail sales, which is retail sales excluding automobile, came in at a 0.1. They were expecting a 0.2. So a little bit of a mixed bag in that one. And message, it sent a mixed message of nervousness, a little bit of nervousness around the Fed's interest rate cut, and SPY did drop in anticipation of the cut. Usually before a major interest rate announcement, you will see SPY go down. You'll see SPY go down a little bit. And I think that's what happened on Tuesday as they're preparing for the interest rate announcement. Wednesday, of course, was the cautionary drop just before the announcements, and then the announcement was made. And take a look at that candle. We had a low here. I want to say, let me just draw up a line here and just see how bad that transition is. Just give me half a second to insert shapes. Would that be a line? Let me see here. We came down to low here about around 562 and pushed it up to a high. This is all in like 1 hour. Okay, that was the wrong one. We pulled that up to duplicate this. If we duplicate this, well, from say 562 up to where does this go here? 568. So there's about a six point variance between the high and the low here on SPY in that 1 hour when the announcement came, which is huge. And then the next hour we came down a variance from about 566 to a low of probably, what would that be, about 561, a little bit less than 561. So you can see there's a lot of activity centered around the interest rate cuts, and the the follow-up press conference that they're talking about. So we settled in right here. Not really sure where we ended up, but somewhere down in here. I can't seem to get a number in there. Somewhere in the upper 561s, mid to upper 561s. Wildly swung both ways. And then what happened? They, of course, analyzed this and said, well, this is actually a good thing. The Feds dropped in interest rates by 0.5%, half a point, and the euphoria continued, ultimately moving SPY 11 points higher to a new record high before profit taking kicked in here the next day, which was Thursday, 572.88. We hit that in the afternoon there, and then on Friday, a lot of technical indicators came in, chart patterns, that sort of thing. A beautiful um, we have here head and shoulders pattern here. Let's see if I can just draw this in here. There's a head over here. Sorry, that is a that is a that's the right shoulder. Sorry, left shoulder. And we have here the head. And copy this and paste where we're going to paste the right shoulder. Kind of came in here after market hours, and we broke down off of a support level here and dropped down, and then Friday is when it sort of came back down. But we did find a level of support down here around the 565 and a half level or so. Pushed the market back up, and we wrapped up the day somewhere down around, I don't know where it was, but just over 568 is where we wrapped up the day. So we're sitting in that lofty position right now. The last I checked earlier tonight, the futures were a little mixed, so we're going to wait and see what happens tomorrow to see where the markets are going to go. And of course, what's more important is where we're going, not where we have been. However, this is what happened. The Fed Reserve kicked off their rate cutting cycle for the first time in 4 years, larger than the typical amount that they do, usually a quarter, but they came in at 0.5%. Talking about here that they want to make sure there's a soft landing in the economy. The supersized cut came after a most aggressive tightening campaign in 40 years. Just to note that it may take a while for these effects to filter through the economy, so I wouldn't expect any more drops in interest rates for a little while yet until they determine if it's working or not. Proactive approach all but ensures again likelihood of a soft landing, helping to reaccelerate growth later this year. It is the start of a rate cutting cycle historically, and it leads to a strong forward-looking um, view of equities, equity returns. Expect later this year to see some real positive activity on equities. Cyclical, mid-cap, and high-quality dividend-paying stocks may also look to closing the gap with mega-cap tech stocks. Pardon the dog barking down there. That is not Lucy. It's some other dog in the area here. I'm not really sure where his dog's from, but um, I might cook that dog before the night's through if he doesn't be quiet here. And what do you think I should do? Um,
As long as it's not, as long as it's not a hot dog. I mean, those are the worst.
oh, yeah. Oh, that's a but that but you're fast. You're fast. Folks, did you catch up to that joke? Did you catch up to that joke? Okay, I think I'm going to close the door at least so that we don't listen to that barking. So, all right. I still got a couple other windows open, but beautiful night right here in Western Europe. This is what it looks like here, moderating inflation and cooling labor market. I make a strong case for policy normalization. That blue line here is core PCE, personal consumption expenditure. The Fed funds target, upper target is that gold line. We're right up there at about 5.5%, looking to come down. And in the ensuing years, later this year and into 2026, they're looking to hopefully drop interest rates down to that somewhere between 2 and 3%. Okay, that's kind of what they're projecting up there. So we'll see what happens. Um, and of course, the core PC projections to come down, depending, of course, on what happens to the personal consumption expenditure. One of their key inflationary indicators that they're looking at. What happened this week? S&P went up 1.4% to a year-to-date of just under 20%, 19.6%, which is the same as the NASDAQ. And the Dow is up 11.6% year to date. All right, and that's kind of what's going on. From a seasonal standpoint, this is a seasonal chart. Blue line is where SPY is now, and the red line is the composite of the last 5 years closing price on the daily chart. If we expand this and zero in and focus in on this is what we get. And we'll see here, if we look at it, that historically, over the last 5 years, SPY dropped about 8 points over the last week. And again, seasonally, SPY dropped another 3 points the following week. And it'll be probably by the end of the month here when SPY starts actually picking up and getting a little traction and starts pulling back to the upside. And that probably explains why it's been so challenging making money on SPY, especially if you're like me and has a bias toward the upside, kind of fighting this downdraft. And I know, Aaron, you did very well with SPY puts in the last little while, and the longer term trend seems to want to suppress SPY these days, but we did see SPY coming up over the last little while too, so a bit of a conflict here when you see what happened to that blue line going up and the red line's coming down. So hopefully this is the end of
Well, you did
goes up.
you did well with some puts as well. I mean, we're just sitting at a major resistance. You took a few good put trades. So when we're at major resistance and all-time highs, there's a propensity to bounce a few times before those are broken. Same thing as long-time support. You can bounce off those a few times before those are broken as well. So we did do well this last week in puts.
Yeah, it was a good week. It was a good all around week. So, and congrats to those who made money with us this week in the trading room and wherever else you had our services. So, what's coming up in the week ahead? Well, we have excuse me, S&P Global Flash Manufacturing and also Flash Services PMI report coming up. Tuesday, Conference Board Consumer Confidence and the Richmond Manufacturing Index. And I think I need a comma in this one here. There you go. Let's go this one. Okay, fix that one up a little bit. There we go. And on Wednesday, new home sales. And Thursday is going to be a big day. Unemployment claims, final GDP price index, durable goods orders, pending home sales, which often follows new home sales. So however the numbers are going to shape up on Wednesday, you can expect that for Wednesday's pending home sales. And then we have a couple key speakers at the Treasury Market Conference. Fed Chair Powell and also Treasury Secretary Yellen are going to be speaking at this event. And we'll see what they say. But Friday, personal consumption expenditures. This is a key point that the Feds look at. Personal income, personal spending, consumer sentiment, inflation expectations. Here's the way I see this shaping up. Volatility could be elevated on Monday and Tuesday, a little bit moderate on Wednesday. Excuse me, again, elevated on Thursday and Friday. But going into the elections, expect markets to continue to be choppy, especially as traders assess whether good economic news is now good stock market news or if it remains sort of flipped. So usually what's been going on now for several years is that good economic news is actually bad for the stock market and bad economic news was good for the stock market. But now we're going to see if this is going to be flipped. So we have to take a cautious wait and see approach to see how the market is going to interpret news when it comes out. All right, so we want to kind of keep an eye on that. And as the rhetoric is going to, no doubt, ramp up in the presidential elections, so going to be kind of crazy. But Daphne, we named this girl Daphne. Not sure where that came from, but Aaron actually named her Daphne, and that's a nice name. She looks like a Daphne, I think. Very cute girl. So she says, "Come hither, trader. We'll show you how to spot them and how to trade them." That's about talking about the many opportunities, the daily opportunities, and of
Was
course,
that Shakespeare?
no, I made that up.
Okay, just I'm just curious. I thought that was Shakespeare.
Maybe it could be. I'm sure Shakespeare said it somewhere in there. Yeah, it could probably pass. It'll probably pass. Yeah, we could call it Shakespeare. Uh, but anyway, I thought it sounded funny. Yeah, good anyway. So, and you can tell she's a spy trader, this girl. Look how surprised she looks. Oh, this is unbelievable. Anyway, lots of opportunities all day, folks. And here's the key. If you miss one, don't worry about it. There's another opportunity right around the corner. And now for the exclusive in the trading room, 2 to 5K challenge. This is the update. And here's what we're doing here. Our goal is to turn $2,000 into $5,000 by the election date. Okay. This occurs every morning live in our morning trading room. You don't have to spend any more money for anything else. You just have to be in the trading room. If you're not in the trading room, we recommend that you get in the trading room, and that's really where the action is. So here's what we did here this last week. All right. Here's the spreadsheet. We started with $2,000 on Monday, and first day we gained $52, put us ahead by a couple bucks. On Tuesday, we made another $52, put us ahead by year to date $3, not much. On Wednesday, we got $65, which was kind of nice, gave us a bit of a boost. And same with Thursday, we had a really nice boost of $154 when our target was $54. And on Friday, we didn't quite meet our daily target, which was $55. We only came in at $12, which is a little tough to get actually, but we're still $72 ahead of our goal. And well, let me draw here. Maybe I could do this. We're 72. Is this right? No, here we go. We're $72. I like this tool. We're $72 ahead of ourselves, which means that even if we don't trade tomorrow, tomorrow's target is going to be $58. Even if we don't trade tomorrow, we're still ahead of the game. And here in the notes, this is what we did. We bought in how many contracts. For example, on Friday, we bought 6 contracts on the 569 calls, paid 367 for them. We sold them at 370. Wasn't much of an increase, but we netted out. By the way, these numbers I give you is net of commissions. We're considering commissions to be $1 a contract, and which is very reasonable, and therefore we're still ahead of the game. So, and I think this is going to get actually easier as we go further on up. That first little bit is the toughest to get because you're using fewer contracts and you're trying to get that initial target. But we hope to get to our goal of $5,000 by November the 5th. So anybody in the trading room, it's not too late to get in the trading room, by the way, folks. So you might want to get in that. Here are the rules. We're using a sim account. By law, we have to do that. But I also trade real numbers, and I talk about my real numbers in the trading room, which I do actually quite well with. We started last Monday, the 16th of September, and again, we're here to finish no later than the 5th of November. I know we say 3 months or 2 months in this case, not quite 2 months. We hope to get up to this November the 5th level by just in time for the election so that you've got a little cash here. And who knows what's going to happen in the market after that happens. That's anybody's guess. Then I think what happens here, and it becomes a crapshoot. You just, throw the dice and whatever happens, happens. I don't know what's going to happen, but we'll see. Anyways, we're starting with $2,000, and again, we're looking to up to 5K, just trading scalps. Here's how we do it. We check the fundamentals, buy in the technical breakouts and chart patterns. Look at Aaron's deep dive analysis as well. And then we throw it all into a blender, see what comes out. Sometimes I admit, sometimes Aaron, I agree with you. Sometimes I don't. By the way, folks, one of us going in one direction, the other going in the other direction, does not mean that we're not on the same page or that one's right, the other's wrong. Just the way we see the market, we could see them both being right, and usually they are.
And it doesn't mean that we're in a corn maze either, by the way.
No, no, when our indicators do unite, our trades ignite. So then you'll really want to make sure that you're in on it. But so here's the thing, folks, and we never mentioned this earlier, but we probably should, especially for the new people who are on. So I come from one set of background rules, I guess, if you want to call it, or protocols that I like to use, indicators. And Aaron comes from a completely separate set of, knowledge base, experience base. And Aaron probably likes to read more than I do when it comes to options books. I just like to look at the pictures. Yeah. But you know, if my indicators say the market's going to go up, and Aaron says that, well, he looks at his indicators and he thinks the market's going to go up, it's probably going to go up. So you really might want to buy call options, right? Now, sometimes Aaron sees longer term, deeper dive analysis, and I see a short term analysis. And so maybe in the short term, I might think, what's pushing the upside? I think it's going to break resistance, and here's why. And I'll explain it. And I look at fundamentals and that sort of thing. Whereas Aaron might go a little bit further out and say, well, it's going to go up to this major resistance level. I think it's going to be a tough call to bring this thing back down again. I don't know. But it turns out usually we're both right. At some point in the day, we both come in and we make our money. So, but I don't know. I kind of like to trigger on the woman in charts, make my money quick and easy. If there's such a thing, get in, get out, make my money, and go on to the next trade. And that's kind of my objective. Whereas if you want to stay longer in, you might want to look at Aaron's longer term projections a little bit more so. Try to be objective. Our objective is to close all positions in the trading room. It doesn't always happen that way, but we always give you an exit strategy. If you are at the end of the day here in the trading room, we tell you what we're looking at doing if we don't close our trades by the end of the trading room, which is at 10:30 in the morning. No guarantees. Can't guarantee anything in this business ever. And all of these trades are executed exclusively in the trading room, as I mentioned. So, anything to add to that, Aaron, at all? I don't know whether we kind of.
Well, I mean, I would say that in the opposite direction also, if we agree on puts, it's usually going to go down. I think as Brian Z mentioned, you had a couple of good put trades this week. And we are always looking to sorry, my daughter's in the background here. We're always trying to make our services better. So we're always open to comments, suggestions, and criticism as well. So we are working on things in the background. So it's like we are working on things in the background as well to always improve our services.
Yeah. Well, that's what we do. That's what we do. So, anyway, folks, join us in the trading room. All right, that's where the action is. And let's take a look at here. Okay, there I am again in live and living color. I want to see if I put this light on, if this helps at all. It's a little bit too bright. Let's take it off. Okay, there we go. Aaron, you can tell the days are getting shorter. Fall's coming because not that long ago at this time, you could see the sun sitting in behind me here. But now you can see that it's already set. And, winter's around the corner. Winter is around the corner. So, all right. So the trading room. What about the trading room? Why do we keep talking about this crazy trading room? And I think there are one or two people who are still not in it. And I don't know why, but kind of hoping that, you join us because it's a lot of fun. We enjoy it. A lot of people who are in on it enjoy it. Hosted by yours truly, along with Aaron, the two of us here. This is what we do every morning. We're going to be on tomorrow morning. And again, Aaron mentioned we have over 40 years combined experience in this market participation. I'm not going to say we're all winners the whole 40 years, and sometimes you have to step back a little bit and assess: is this really for me? Should I go back to working at the car wash, or you know what I'm saying? Maybe when you blow up your account, you say, "Oh my gosh, I got to reassess this." I'll tell you what kept me in this business for such a long time, and keeps me in the business for a long time, even when I have bad days. And everybody has bad days. If anybody ever tells you they never had a losing trade, rest assured they are lying to you. They are flat out lying to you, or they're delusional, or they just forgot about their losing trades. And Aaron, I know you talked about that. You talked to some people, they never had a losing trade. I don't believe it. I'm sorry, pal. I just every trader has losing trades, some more than others, and some not so often. I know I don't like losing trades. I don't do them very well anymore. I try not to have them. So I will try to repair trades if need be. But anyway, sometimes you'll have losing trades, but I don't want to have losing days. All right, big difference. I don't want to have losing days. But anyway, we have learned a few things along the way here. And we figured that if we do less of what causes losses and more of what, creates gains, eventually what you start doing is more of what is a positive thing, right? You just start doing those things that are right. And I know that that works for me. And I know that in my trades, I log my trades and I go back and I try and assess my challenges. Where were my challenges? What did I do? What did I do wrong if I had a losing trade or a challenging trade? Should I have gotten out earlier? Did I see something? Was there some news item that pushed markets the other way? Was there did I hit a real key resistance area that's just not letting go? And I'm thinking the market's going to continue on to the upside. Was I more into wishful trading than sort of more objective kind of trading to see what's the market doing, what's the market telling us? So these are the questions that go through my mind, and eventually you learn, right? And if you're still losing money, it just means you haven't lost enough yet. Because eventually you're going to learn that you have to learn how to make money in the market, like if you want to stay successful longer term. Anyway, the trading room is where it all happens. And we invoke all of these lessons that we had learned over the years and the decades that we have done. And these, what we know now did not come cheaply, at least not for me. Maybe it did for Aaron, but Aaron, I suspect you lost a lot of money along the way too. Uh, I don't
Yeah,
know.
I mean there was a few blown accounts somewhere. I remember. Um, but the thing is that you have to pick yourself up by the bootstraps and realize that that is your cost of admission into the game. The game is that you're trading against the best traders and institutions in the world, um, and that those first losses may be the cost of admission. I can say something about one person that was trading in the trading room. He's a great trader, and he figured out some things with market direction and Fibonacci and support and resistance. Started making some really good wins, but then he changed his rules, and it bit him a bit. And then he was kind of hurt, but he came back swinging, and had a few more wins after that, and has started back on the road to consistency. Learned his lessons, has a daily trading journal. Probably the most organized trader I've ever seen. And if he's listening, he knows what I'm talking about. But and so if you treat this like a business, if you treat this like not like a job, because it's really not, but if you treat this like a business, and you track your trades and you track your wins and your losses and your gains and your experience over time, just like anything else, you're going to become better at it.
That is so true. Treat it like a business, it'll pay you like a business. Treat it like a hobby, it'll pay you like a hobby. That's really what it is. So you have to take this very seriously because it's there's risks involved in trading options. I'm not going to kid you. There's lots of risk in this, and the losses can be substantial. When we put up that disclaimer at the beginning of every show that we do, I mean, there's a lot of truth to that. It's all true. It can be substantial, and I don't like to see people blow up their accounts. So anyway, the trading room fully narrative, fully narrated. I should say it's interactive. You can ask questions just like you do here. This is where you learn and earn. This is where our strategies come alive. They're also recorded. So trading room members can go back. If you can't see the event live, you can always go back later and pick it up and view the recording, right? And this is, of course, every morning, 9:20 to 10:30 Eastern time daily. So we don't monopolize your whole day. I've been in trading rooms in the past. Maybe you have too, Aaron, where starts at 9 o'clock in the morning, goes till 4 o'clock every day, Monday to Friday. Well, that has now become a full-time job if you're going to do that, right? And that was never the intent with this. The intent here is to make money and go on and do things that you want to do the rest of the day. Whether it's do your hobbies, fly airplanes, sail boats, go for walks, hang out on the beach. Um, I know sometimes, Aaron, you like to be the de facto lifeguard on your local beach. It makes sure nobody drowns. Hang out with your family, whatever. And the
I think it's
objective
that
here.
David Hasselhoff hair, to be honest. I think that's what happened. I got that David Hasselhoff hair.
Oh, is that what? Okay, that's um. So the idea is to me being rich is having enough money to do the things that you want to do other than making money. So, free time. The one thing that we cannot get any more of or any less of is time, and how you spend your time is very important. I'm even to the point now where the other day my wife and I went to see this movie. We thought it was going to be a good movie, and we left after about a half an hour because along with a bunch of other people, because the movie was so damn bad. How could they put this on the screen? It was a horrible movie. And we're not the only ones to walk out of the movie. But anyways, I don't even remember the name of it. It was anyways, this is a dumb movie. We thought it might be, it might be a little iffy when we went in. But anyway, the guy that made the movie gave a little speech beforehand, and it turned out I think he was just reliving his fantasies as a 15-year-old. It was just disgusting. But anyway, um, so I view time as precious. So we're here not to waste your time 9 to 4 every day, when most of that time is spent just sitting and waiting for something or nothing to happen. We get in there, amateur hour, some of these people call it. Well, that's where we make most of our money. And when the market's moving up, we get in, make our trade. When the market's moving down, we make the decision, we go down, make our money, get in, get out, and we're done. It's also the trading room, the home of our highly acclaimed 2 to 5K challenge. The cost of the trading room is only $6.99 a quarter, which is nothing. I don't even think you can get a 6-inch Subway sandwich for that, a daily sandwich. So I think that's, if you buy one of us lunch every day, Aaron or myself, I think you got it covered. And if you really don't like it, in the first couple of weeks, just call up the customer service, email customer service, say, yeah, it's not for me. Can I have my money back? And they'll give you your money back, no problem. All right. I don't know of anybody else who does that. It's just that's how confident we feel in the system that you would do this. What some people are saying here, I love your simple approach to trading options. I've taken other more in-depth options training. Would like to be hard pressed anywhere to beat your simple SPY approach. Thank you for that, Mark. We also have the inner circle. The inner circle is what started. That was actually my first service, our first service, I guess I could say now, back in 2010. So what happened was when my financial advisor blew up my account back when I was younger. I had some words with him and I demanded my money back for whatever was left, and I figured I have to learn how to do this myself. And my background was with numbers and risk and different things, so I was quite confident that I could learn how to do this. And I set out to learn as much as I could, and I started making some pretty serious money after a while trading SPY options to the point where people started asking, "Okay, Hugh, what are you doing? Did you win a lottery or what?" I said, "No, no, I'm trading options." "Well, can you show me?" So put it up on the board on the internet, and that was the beginning of our inner circle. So I just pulled these people in as my inner circle. Had an itchy nose. I don't know if that means, am I going to be getting money with an itchy nose? Does that happen? Or anyway, inner circle. It's been there since 2010. This has got to be the longest running program that I know of in this industry. And every morning, inner circle members get a morning market analysis just a little after 9 o'clock, and you'll also get a post-market follow-up report later in the day. Sometimes it's in the afternoon, sometimes early evening. And you also get to join in our Wednesday night interactive meetups where you can ask anything you want, discuss your trades. Aaron runs these mostly these days, and these are also recorded. If you miss them, not a problem. You get the recording right after. Okay. Which is actually really good because some people in the different time zones, they might not be able to see these Wednesday night meetups that happens at 8 o'clock Eastern time. The price for the inner circle is only $9.95 a year, or if you want to go by the quarter, it's $275 a quarter. And again, it's the longest running trading service. Been doing this since 2010. All right, now that is the inner circle. I'm just going over some of the services that we have because we have several services that are pretty good actually. And this one here, maybe I should bring this out here like this. There we go. All right, day trade spy signal. This is ideal for those unable to watch markets all day. So you're going to get 3 to 5 signals. These are algorithm based. It goes to your cell phone as a text message and also your email. The point here is when you get this, if you happen to be driving along, pull over to the side of the road, pull up your app, your trading room app, and you buy the option that is sent to your text. Okay. You buy in the first couple of minutes and then you immediately put up for sale for a 5% gain. If you do not sell it by the end of the day, all right, or if it does not sell for the 5% gain by the end of the day, sell it at whatever the market gives you. Now, this has an excellent track record. It's been going extremely well. I can't remember now what the number is, 92, 93. I'm just kind of throwing a number out there. I'm not sure what it is. It's a very, very high success rate, and you do very well with this signal, right? The cost here is 14.95 a year, 3.99 a quarter, or 149 a month. Again, with this too, you get a full 100% money back guarantee if you decide it's not for you within 2 weeks. This is the Day Trade Spy signal. Cell phone, email, you buy it right away, put it up for sale for 5%. If it doesn't sell by the end of the day, just sell it for the market price at the end of the day. All right. And you net out actually very well with this. Now, a lot of people make a lot more than 5%, and we teach you how to do that in the trading room. Next up is the pick of the day. Okay, well, does that? Okay, the pick of the day. This here is similar to the signal, but what you do is you get actually the pick before the market opens. Again, this is also ideal for those not able to watch the markets all day. So if like you're working or you want to, I don't know, you're just not able to get in there and watch the markets, you can actually trade this. If you can get to your computer or to your app, right at market open, you can actually trigger this trade, just buy it and put up for sale, and you can watch this, right? Daily recommendation, Aaron and I get together, we discuss, is it going to go up or down, which way is it going to go? And we email this to you somewhere between 9-9.25. Buy it again, buy it immediately, and then you sell it for 6% gain, good till canceled. You could possibly hold this overnight. This is okay to hold overnight because we build into it a time component. So, you should be okay if you have to. It's not very often that you have to hold this overnight. It also has an excellent track record. Cost again, 14.95 a year, 3.99 a quarter. You get a 30-day money back guarantee with this, 100% money back guarantee if you really don't like it. You can't go wrong with these programs. I mean, you really can't. And I really, highly recommend them. Um, Question, why trade options? This comes up from time to time. SPY, why SPY? Why don't you diversify? Why don't you buy other things? Do you look at the SPX? How about the diamonds or the Dow or whatever? You know, SPY it tracks the top 500 stocks. It's highly diversified, covers all the market sectors, highly liquid. The fills are quick. They got tight bid-ask spreads, relatively predictable. We actually have a very good system by which we can predict where the markets are going to go. With Aaron's, Fibonacci and Andrew's pitchfork and other things that he uses, I use, my chart patterns, support resistance, and we use the yellow brick road. These are all tools that we bring into the trading room and we determine where the strong likelihood of the stock going is. And when we see something forming that okay, this is ready to break to the upside, for example, now here's where I think it's going to go, and we buy the options, the appropriate options, and actually we make some pretty serious money in the markets that way. Relatively predictable, relatively forgiving even if you're, wrong in the short term, or if you think it's going against you in the short term, I shouldn't say you're wrong, but if it goes against you in the short term, if you just wait a little bit, it'll probably come back in your direction and take you out. We've seen this time and time and time again. Also, what I like about SPY, it's actually very affordable. You don't need $1 million to get started in this business, Even if you have a few $100s, you can actually technically start in this business, although I don't recommend getting in for just a few $100s. I'd highly recommend several $1,000s if you can get into this thing. It's just the best instrument out there, especially if you're new to the business. So you're basically trading the whole economy. Where the economy goes, that's where SPY is going. All right, out in the cornfield chat. There's a cornfield. I think that's a cornfield there. Maybe it's not maybe it's wheat or straw. I don't know. But we'll take your questions now. We'll take some questions. All right. First question from Stephen M. If I don't own a computer, I couldn't see much last weekend. Okay, couldn't see much on your iPhone. Is there something I can get any value from? Well, get a computer. Computer's the best. I think cell phones are second best, or laptops, or iPads, iPods. Um, my kids have all that. iPads, iPods. I just know that I pay. But you know, if you can get a computer, that's probably the best. But yes, you can get value from what we do, obviously. Kenneth F, I really like your service. I didn't think you're just trade off spy. Is there any other training to know when to trade spy up or down when it goes down? I made a lot of money both calls and puts. Again, Kenneth, if you're in the trading room, that's the best. We are going to have, I don't have the dates yet. We are going to have the ultimate training workshop. I'm guessing in the next couple months. You want to stay tuned for that. The all new, all improved, all new, exciting ultimate training workshop. We're going to present live. You're going to, pay attention and watch for the news that's going to come out on that. You won't be able to miss it because I'm sure they're going to be promoting it like crazy. And I don't have any dates on that, but just keep your eyes and ears open for that. And you'll be anything to do with spy options, it's going to be there. Okay. So, Brian Z, I took some puts and introduced trading stuff. I played a little bit of trading, trailing stops. I'm not going to kid you. I mean, I play along with some stuff. So personally, I try different things too. I mean, I'm not always just one-sided, but I do like to trade what works best for me and make money on that. Da, 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 da. Lafayette. Okay, or is it K? I don't know. What are your plans for the 568 SPY challenge trade? I'm not sure what my plans for the five is that what we had on earlier? I believe well we got out of we're not in any challenge trade right now. We did sell. Didn't make a lot, but we did sell. Made I think 3 cents or something on Friday. So we're gonna come back and hopefully make some money tomorrow. Uh, Douglas wants to give Daphne his phone number. What do we do with that, Aaron? Do we give Daphne his phone number? Uh,
I would say so. She's young and single.
yeah, young and single. I don't know. I'll see. We're gonna run a singles club here, right? Daphne, yeah. I think a lot of people would like Daphne's phone number. We should see that. So, how does a sim differ from live? Good question. Simulated, it actually doesn't. But by law, FINRA rules, we're not able to show you my live screen. I can't show you my live trading screen. I don't know why, but ask them. Anyway, and that's fine. So we have to show you sim trading. The only difference is, if there's a difference, is that in the sim trading screen, there's a little latency, a few seconds delay in the reporting of the trades. Now, when I announce the prices and stuff, I'm actually giving you right off my live, real time, right up to the split second numbers. And you are seeing that in the sim account, just might be a couple seconds before it flashes on the screen, and that's it. Um, there is a question related to that concerning what about delayed data? If I'm seeing delayed data on your sim account, then what you need to do is deposit some money into your real account. All right, then you will get live data on your sim account if you're using Thinkorswim. So you do have to have your account funded. You don't have to trade it, but you have to have it funded to get live real-time data on your sim account. Menard, I was not able to sell my challenge trade Friday. I had to sell in order. I had a sell order but did not reach. What do you do Monday? We'll take a look Monday. If the market goes in your direction, sell it. If not, maybe take a bit of a loss. Maybe make it up down the way. Um, and maybe that's the thing to do. We'll take it up on Monday in the trading room. All right. Atiba, yeah, so you might want to sell at market open, see where it goes. We're gonna assess where the market's gonna go tomorrow morning, and you might do very well with them, right? I think there were calls, there were call options, I'm pretty sure. So, uh, okay, so here's a question here: the 2 to 5K challenge. You may not be able to trade because of the pattern day trade rule. Anyway, you can trade around it. Yes. Okay, so we recommend a cash account. And we're actually trading the challenge trade as if it is a cash account. So in other words, we're not going in and out all day long. We're just basically trading one trade a day, and then with a cash. So what this says, the pattern day trade rule says this: unless you have $25,000 in your trading account, you can only trade 3 times round trip in a 5-day period. Okay, 3 times round trip in a 5-day period. The way around that is, well, either you ramp it up to 25,000, but a lot of people don't have that. But if let's say you have 5,000 or six, $7,000 in your trading account, okay, with the challenge, that's not what we're trading. We're only trading that 2,000 and trading our profits every day as it goes up. But you have to wait until the next day until that trade, the prior day's trade settles. All right. So let's say you make $50 in the first day. Now you have $2,050 with which to trade. With a cash account, you can do that. All right. With a cash account, you can trade as much as you want as long as you have the cash covered in your trading account. So you should be okay there. All right. So we are trading it as if it is a cash account. All right, deep back. What indicators, what technical indicators setup do you look for in the 1 minute SPY? That's what we teach you in the trading room. That's why you have to be in the trading room. That's where we go into it. It gets very well, not complicated, but it's a little more complex, and we don't. That's what we teach in the trading room. So, any other questions here? What do you want to go for questions? We kind of want to get through this. It's 9 o'clock already. Whoa. Uh, how's the signal service doing? Very well. I don't have a number. I can't give you a number on that, Eric. It's going very well, though. You might want to get on that one too. I know you've been with us in the past. What's your opinion for this week's volatility? I mentioned that earlier. I think Monday and Tuesday, Thursday and Friday is going to be probably relatively high, elevated volatility. Okay. Okay. Rod's saying that if you got the Schwab mobile app, get it so you can go back and forth between screens. You don't see the 1 minute chart. I'm not really sure. I don't really use the mobile app to look at charts here, Rod. I basically use the mobile app if I have to, say, close out a trade. I like to be in front of my computer for the charts. I just find that working with cell phones and charts and stuff can be a little cumbersome. So, oh, 2 minute tutorial. Okay, 2 minute tutorial. This might not take 2 minutes. Why are my charts different than yours? So sometimes we're gonna see different charts. All right. So here's a reason. The data feeds. So there's data feeds that come to you from whatever source. They're like little packets, many times, a second, millions of times a second. So when the data hits your screen and your program analyzes it, it may be slightly off than my screen. Doesn't mean my screen is right and yours is wrong. Mine could be they might be just microseconds off. So you might see slightly different data, right? And sometimes even Aaron and I will differ on when the market closed yesterday when we talk about filling in the gap. We might be a penny or two off. And these are just data feed differentials. And sometimes you get some server issues where you'll get a little different data. And the other thing is sometimes some of the indicators may be different because I might adjust some of my candlesticks. In other words, if I have some wild um, wild spikes, I might remove those candlesticks because, with the spike stock way up there might have been one share that traded, $5 way up there. Well, I might remove that candlestick because the price of the stock really isn't up there. It's down here, sort of more normalized. So if I remove that candlestick, that is going to affect the indicators, right? Because the indicators are all going by the price, right? So differentials there. So um, another thing here is, pardon me while I just I'm talking all day and I have to wet my throat a little bit so it doesn't get too dry. The other thing is different time frames. I noticed that some people don't put the pre-market data on their charts. I don't know why you wouldn't. To me, that's just as important. But I like to have the pre-market, post-market data on my time frames. And if you have that on there, you may find that your indicators are perhaps a little bit different as well. So those are the main differences in why our charts may be different. Don't worry too much if they're off by a couple of cents, a few cents here and there. Generally, when you get support and resistance numbers, even though it's nice to have them perfectly right to the penny, sometimes you're going to see where they're just couple cents apart from, and you're going to get support and resistance in a bit of a range. There may be a 5 or even a 10 cent, maybe not 10 cents, but probably about a 5 or 6 cent area of support and resistance. So, that has to do, I think, with data feeds and different things. So, if that makes any sense. All right, next up, what are we going to talk about here? Any more questions here? Uh, any more?
What I would want to say is that there's a lot of questions about different rates. Here on the webinar, on the weekly webinar, you get the best rate for the trading room and for any of our other services. So if you see the rate that comes up, you definitely want to be in the Sunday night weekend review for the best rates.
That's actually a really great point. Thanks for making that, Aaron, because that's actually really good. And you know what? To get that rate, you have to email customer service, all one word, customer service at daytradespy.com. All right, write that down. Customer service at daytradespy.com. I believe if you wait until after the session's over, the trading room um, landing page where you can actually book, subscribe will pop up. So if you want to wait for that. But that's true. If you go to the website itself, you're going to get higher rates. Skip that. Just email customer service at daytradespy.com. Ask for what's the best rate for this or that or whatever, and they'll give you the best rate. So, good question on that. All right, I don't keep it too long here tonight. Why SPY as opposed to the Qs? Good question there. So the Qs is the Nasdaq, which is mostly the tech stocks. And basically where Microsoft and Apple and Google go, that's where the Qs are going to go. So if Apple has a bad day or the Qs has a bad day or I don't know if Bill Gates discovers a cure for death, all these conspiracy theories. I saw a documentary on this guy the other day. I thought that was pretty cool. But anything can happen, right? So I don't want to be too heavy in one sector like the tech stocks that's going to be highly affected. It's going to impact my options. And I find that the tech sector, the Magnificent Seven, which is very heavy with the tech sector, you get all the big names there. What is this? Microsoft, Google, there's Amazon, you know Netflix, you get Tesla. What else is in there? I don't know, maybe Netflix isn't even in there. There's Microsoft. What do we say? Whatever I just talked about here. But so they're very overvalued. And if there's some stress in the global economy, let's say there's a threat of a nuclear war or somebody becomes president that's not very good and something goes really, really crazy. Markets get very nervous. What they do is they take money out of the equities and put them in safe havens like gold. So you'll see a lot of movement from the equities rolling into gold. Gold futures, all gold goes up like crazy, and the equities go down. The first index I found between the Dow, Nasdaq, and S&P 500 is the tech sector, the Nasdaq. That's the first sector to drop. So you'll see all this money flowing quickly out of the tech sector into gold. And that's usually a pretty good indicator that, oh, there's some trouble brewing, some global issues or something, geopolitical tensions or something. So and there's a lot of that these days, let's face it. So it's just a little more volatile, I think. And that's why I like to have SPY more diversified. There isn't any one stock that's going to control the entire SPY, although those Magnificent Seven, they collectively they have a lot of influence. I think probably about 30% of the entire SPY, but individually, I think they might have 6 or 7% at the most of the capitalization of the sector. So that's the reason I like to just do SPY instead of the Qs. Okay, let's see. We get past trading room recordings after you join. Yes. If you join the trading room, you should be able to get the past recordings. I believe so, right, Aaron? I'm pretty sure. So that's pretty good. Uh,
Yeah, you do get the best recordings. I would say that it's good to learn and watch a few of those to get kind of an understanding. But, I would say that a lot of the time, the course they have, the Ultimate Training Workshop or any of the other modules would better be a little more than the past recordings.
Yeah. Um, I like Rod's comment. I think it's Rod. Yes. My calculus textbooks are in storage. My eyes glazed over when I heard Fibonacci being one of the series. So, okay, so here's the difference between Aaron and myself. Folks, as I mentioned many times in the past, Aaron is the smart one between the two of us. He's actually much smarter than I am. I may be better looking, ladies. This hair is still real and it's gray. That means I guess I'm distinguished. Is that what that means? I don't know. That's what they tell me, but I feel young at heart. And so I like to keep things simple. I'm actually a simple kind of a guy. You know what I'm saying? Um, I fly a single engine airplane, not a twin engine. I like to keep things simple. I um I enjoy my dog. I enjoy, simple things in life. Now, Aaron, on the other hand, he delves deeper into the more technical, deeper dive analysis. And when he pulls up his charts, I admit it could be very confusing, very overwhelming. But we try to simplify. I try to simplify things. And I think Aaron tries to simplify things. I'm pretty sure. So that's why I like simple, and so I never took out to all those options books out there. I read it. Well, I tried to read a few, but I found them to be just extremely boring and highly, how should I say, highly technical in nature that just didn't really make a lot of sense to me. And I thought, you know what? I was looking at the charts and I poured for hours and hours and I don't know how many hours, hundreds of, maybe thousands of hours, I'd be poring over charts every day. I remember my wife would come into my office and say, "What are you looking at anyway? What are you so engrossed in the screen?" And I say, "Well, take a look at this, Every day this happens. Every day this happens. Or when this setup happens, this happens. This setup, this happens." I say I try to keep things simple. So if I see a certain thing that I could replicate for a highly likelihood of a successful trade, that's what I look at. So if I can simplify things, because look, stocks go up and they go down. There's no other way they go. They go up and they go down, and they go up and down multiple times a day, right? So if you just, pick an anchor in time, and given the certain indicators that we use, where there's a high probability it's going to go up or a high probability it's going to go down, so you pick an anchor and say, okay, I think from here it's probably going to go down. Let's go to the downside, and then let's pick something with plenty of time, right? So you don't have this theta loss eating away. And let's look at something that, let's look at a modest gain instead of shooting for the home runs. Should you not be able to make some serious money on the market? And coming in with that philosophy, but trying to keep it as simple and clean as possible, it seems to work very well for me. Now, Aaron, I know you get into some really heavy stuff, and sometimes you predict the market's going to go up $3.50, and bang, if it doesn't hit right on the money. I don't know how you do that, but more power to you. I don't know how you do it, but you do. So if you want to
Well,
patiently,
it's really, well, I try to keep it simple as well with the Fibonacci patterns, just the ABCD pattern. I mean, it's going to hit one of two levels, or sorry, one of three levels usually, when price retrace, and then it's going to hit one of two levels when price extends. And so if you can measure it, if you just use measuring tools or a trend line tool, it's pretty simple. There's a few people that are here that are using it very well. Now the Fibonacci time is something that I started to use, but when it's right, it's really right, but sometimes it's not always on, so I just use it as context. But when it's right, sometimes we predict the market turn within a minute on the charts, and I think you've seen several times now, Hugh, that has come into pass. So um,
sounds good.
actually, he wanted to know exactly the exact minute when the market was going to change direction. I said, well, you know what? I have Fibonacci time in my tool set, so that's when we started using it.
Uh-huh. Okay, and I have a question for somebody. Okay, I think he might be off now. Hang on, maybe not. Maybe not. Give me a second here. Yes. Okay, Michael H. There's a Michael H online. Are you the same Michael H. I met there yesterday or the day before? let me know in the questions box with the daughter, Margot. Is that you, Michael? I'd like to know that. That'd be kind of cool. So, and he's a question here. He's asking the question, why do puts cost more than calls? I don't think it's necessarily that they do. It's a mad question of volatility. Where does the market see the future coming in the next little while? And if they really think the market's going to go down, you're going to see an increased volatility, which means the cost of the puts elevates. And that's something else that we look at too is volatility. The other day, the market really shot up, and the cost of or rather the volatility of the calls was very low. And I had a little concern about that because, well, if the volatility is so low, it's going to be a real stretch trying to make 5% or 6%. So I thought that, okay, well, I'm going to hold on until the volatility actually runs back up. So anyway, Michael F., punch up in the questions box if you are the Michael H. Michael H. That I met the other day, yesterday, I think it was the day before. Yeah, I didn't see yesterday. In Boston. It'd be nice to know. And that would be good. So I haven't heard from him. So anyway, all right, some other questions here while we are waiting for Michael H. to respond to that. Okay. Fernando, gotta go. Great session. Thank you so much. Daniel H. So he's asking about this 25K rule, pattern day trade rule. Okay, so if you don't have $25,000 in your trading account, that means you have to abide by the pattern day trade rule, which means you can't do any more than 3 times a round trip trade in a 5-day period. If you do, they flag you. And I think if you're flagged, 3 times or something, 4 times or something, I think it's 3 times you're allowed. But I think they give you what's that thing called? They put you on notice. All right. They send you an email, slap your wrist, don't do it again, don't do it again. But if you do that, I think 3 times in a rolling 12-month period, maybe it's 4 times, then they suspend you for 6 months. They put you in the corner, put a dunce hat on, you say you're not trading with us. So if that happens to you, there is a way around that too. And I got this firsthand from the broker. I couldn't believe that the broker's telling me this. The answer there is all you have to do is open another account, same broker, and transfer your money from your suspended account into your new account and go knock yourself out. So you might lose a day in there, but it shouldn't be that hard. So it's pretty cool. I mean, I did that, in the early years a couple times, and you sort of learn real quick. So you track it. How many of these good faith violations is what I think they call it. Good faith violation. How many of these can I afford to have? So you don't want to go crazy on that. So because it's really a pain, right? So you don't want to do that. So anyway, I think the time is getting on at 9:18. Oh my gosh, I didn't mean to stay this late, but this happens every week, Aaron. I think I just have so much fun with this. We're gonna call it a day, folks. Remember, if you want what I have, do what I do. And Aaron, thank you all for joining us. Thank you, Aaron. Been a pleasure. See you tomorrow morning. Thank you, Aaron.
Yep, take care.
You're the one, shine brighter than the moon and the sun. Be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you can have